It is a beautiful, chilly November day here in Cambridge. And I just want to talk a little bit about what's going on, or what I'm seeing in the real estate market here in the greater Boston area. Interest rates have started to essentially taper. They were up over 7%, and now they have dropped down below the 7% mark. They dropped, I think it was like 65 basis points at one point a couple of weeks ago, but they've kind of leveled off in the mid sixes. Mid to high sixes. As soon as that happened, I think people took a collective breath of relief, if you will, and just realized that it's probably not going to skyrocket just up into the 8s or 9s, which I think some people were not necessarily anticipating, but wouldn't be surprised if it actually happens. As a result of that, we have seen a sharp uptick in activity on the buy side. There are simply not enough homes available for sale out there. So anyone who's sitting on the sidelines thinking that they're going to get a great deal by continuing to wait, that is a fool's game. That is not going to happen. Come the spring, you're going to see tremendous amount of buyer activity. Again, probably not nearly as many homes on the market available for sale that you would like. So as a result, with the smaller inventory and the more buyers out there, you're going to have competitive situations. In fact, I just had one. I listed a multifamily property, and it was a multiple offer situation. The thinking is right now that things are a little soft in the real estate market, and in some markets they are. But here in Boston, the greater Boston market, again, I'm here in Cambridge, but anywhere here in Boston, you're just not seeing that. It's just going to continue to remain strong. Even in like 2008, 2009, we did not see any type of sharp drop off in home prices. I think the biggest we were down in some of these areas was about 15%. Other places like Las Vegas, Miami, Los Angeles, those places were down almost 50%. So you're just not going to see that around here. We are just surrounded by schools. A tremendous amount of intellectual capital exists in this market. So I won't say you're never going to see a crash, but probably not going to see a crash anytime in my lifetime, since we have so many institutions. I mean, again, I'm here in Cambridge. I've got MIT up the street, at Harvard, Boston University, Boston College, Northeastern, like huge schools. Biotechs everywhere, literally everywhere. Kendall Square is right up the street, and that's like the biotech capital of the world. That's where Moderna is. You just are not going to have the same type of home price depreciation that you would see in some of the other markets. So the smart buyers are the ones that are out there shopping for a home right now. Not next spring, literally right now. Because there are still some places that have been on the market for a little bit of time. For whatever reason, they just haven't sold yet. Actually, I'll give you the number one reason why homes haven't sold and that they've come back on the market is because the financing fell through. And the reason why is because over the past 2 or 3 months, people who had a pre-approval at, say, 6% found themselves, when they actually got a place under agreement, the rate had gone to 7%. Well, at 7%, they can only afford about 10 to 15% less in terms of a purchase price than they could 3 months prior to that. So what ended up happening is they would have the pre-approval, it would say they were approved up to $700,000, they buy a place for $700,000, and then the bank comes back and says, I'm sorry, you can't afford this $700,000 place, you can only afford $600,000 and say $50,000. So when you go back to the seller, these people went back to, of course they go back to the seller, like, look, I can't get the loan unless we reduce the price down to $650,000, and the sellers were like, I'm not interested, go pound sand. Now, the other thing that's happening is banks are getting much more creative in the options that they make available to their buyers. So things like 3-1 ARMs, 5-1 ARMs, 7-1 ARMs, the adjustable rate mortgages, those are back in a big way. So those are terrific options for folks who plan on refinancing over the next, say, 5 years or so, or who are only in a place for 5 years and then plan on moving after that. And then the other thing that we're also seeing is what's called a mortgage assumption. Now, Lamacchia, I happen to be at Lamacchia, and Lamacchia is a huge proponent of this. And there are many stipulations in terms of who can actually assume a mortgage. But if you are in a position, if you're a seller and you happen to have a mortgage that is assumable, that makes your property much more attractive to potential buyers because they can assume a mortgage that has a significantly lower interest rate than what they can get currently on the open market. So just keep that in mind. In fact, I'll put a link down in the description with a video from Anthony that talks a little bit more about the mortgage assumption. those are my thoughts. That's exactly what's happening, what I'm seeing happening here in the, again, the greater Boston real estate market. If you have any questions, please leave a comment down below. And if you did enjoy content like this, I just kindly ask that you smash the like button and also click the subscribe button down below to be notified of future videos. Thanks for watching. Take care.